This is Real Wealth Network's 2019 market overview for Chicago, Illinois. With higher real estate prices and lower than average job and population growth, the Windy City may not seem like a good place to invest in real estate. However, it is one of the few cities in the nation where housing prices still haven't risen past their 2006 levels. Couple that with the fact that quite a few Chicago suburbs are growing. In many of these neighborhoods, it's still possible to find homes for sale around $160,000 that'll rent for just about 1% of the purchase price every month. In this video, you'll learn about the top 3 factors that make Chicago one of the strongest real estate markets today: affordability, cash flow, and equity growth. Before we get to that, here's a little background information. Located in northeastern Illinois on the southwestern shores of Lake Michigan, Chicago is the 3rd most populous city in the United States and the 5th most populous city in North America. Chicago was originally home only to the Potawatomi Indians, but during the late 17th century, French explorers, missionaries, and fur traders came to the area, building a small settlement and a U.S. Army fort. The city was officially incorporated in 1837, and it grew rapidly from there due to its strategic position near the emerging railroad system, access to the Great Lakes, and Mississippi River Basin. Since the 1850s, the city has been the dominant metropolitan hub in the Midwest and has played a crucial role in the economic, cultural, and political growth of America. According to World Business Chicago, the Chicago Metro is home to more than 400 major corporate headquarters, including 31 Fortune 500 HQs and 300 corporate R&D facilities. Some of the most well-known Chicago HQs are Walgreens, Boeing, and Sears Holding Corp. Today, the Chicago metropolitan area, often referred to as Chicagoland or the Windy City, has a population of 9.5 million people, which gives it the 3rd largest population in the U.S. The city is also recognized as the 4th most important business center in the world. It also has the 3rd largest labor pool in the United States, with about 4.48 million workers. Chicago also offers great opportunities for investors today, especially those who are comfortable with a slightly larger initial investment, around $107,000 to $185,000, strong cash flow, and a good chance for equity growth. Let's take a closer look. In January 2018, the median purchase price of 3-bedroom single-family homes in the Chicago metro area was $196,000. This is 3% less than the national average of $202,000 for 3-bedroom homes. In the neighborhoods where RWN members invest, the median purchase price was only $128,000 in January 2018, which is 37% more affordable than the national average. This shows us that real estate in Chicago is still more affordable than many other areas in the United States today. In the neighborhoods where Real Wealth Network members are investing, property values are even more affordable. In January 2018, the median monthly rent for 3-bedroom homes in Chicago was $1,542, which is 0.79% of the purchase price of $202,000. This is higher than the national purchase-to-rent ratio of 0.74%. In the neighborhoods where RWN members invest, 3-bedroom homes rent for a median $1,479 per month, which is 1.17% of the $128,000 median purchase price. This shows us that Chicago offers investors a strong opportunity to generate cash flow at a significantly higher rent-to-purchase ratio than many cities across the nation today. In January 2012, the median price of 3-bedroom homes in Chicago was $149,000. This means that, in the last 7 years, or January 2012 to January 2018, 3-bedroom homes in Chicago have appreciated by just under 24%. During the same period, 3-bedroom home values appreciated by 41% nationwide. This shows us that Chicago home prices have been rising more slowly than other U.S. cities, but what's important is that they have been increasing. This is a good indicator that Chicago's real estate market is more stable than quickly appreciating and depreciating markets. Over the last 7 years, or January 2012 to January 2018, the median monthly rent for 3-bedroom homes in Chicago has increased by 12%. During the same period, rents for 3-bedroom homes increased by 17% nationally. Although Chicago rents have risen more slowly than other U.S. cities over the last 7 years, they have increased substantially. This is a good sign that Chicago offers investors a good opportunity to make more passive monthly income over the next few years. Between 2010 and 2017, Chicago's population increased by 0.65%. During the same period, the national population grew by 5.29%. This shows us that Chicago's growth is declining. In fact, growth is declining in the entire state of Illinois. According to U.S. Census data, Illinois lost more residents than any other state in 2016 for the 3rd year in a row. The state's population is now at the lowest it has been in nearly a decade. The Chicago Tribune recently surveyed dozens of former Illinois residents who have left the area within the last 5 years. They all offered their own list of reasons for doing so. At the top of the list were high taxes, the state budget stalemate, crime, the unemployment rate, and the weather. In the past year, Chicago added 31,400 new jobs to their economy, an annual growth rate of 0.67%. This is 61% below the U.S. annual job growth rate of 1.73%. According to Michael Lucci, Vice President of Policy at the right-leaning Illinois Policy Institute, neighboring states offer stronger job and business opportunities than Illinois today. This is especially true for younger, working-age adults who make up some of the largest groups leaving the state. So let's do a quick recap. Number 1, Chicago is still affordable. Real estate in Chicago is still more affordable than many other areas in the United States today. In the neighborhoods where Real Wealth Network members are investing, property values are even more affordable. Number 2, Chicago cash flow is strong. In some Chicago neighborhoods, there is an opportunity to generate cash flow at a significantly higher rent-to-purchase ratio than the national average. Number 3, Chicago has equity growth potential. Chicago home prices and rents have been appreciating more slowly than many other U.S. cities. The important thing is that they have been rising. This is a good indicator that Chicago's real estate market is more stable than quickly appreciating and depreciating markets. Number 4, Chicago is not growing as quickly as other U.S. cities. Chicago's population is growing at a slower rate than the national average. The city is also creating jobs at a slower rate than other U.S. cities. The important thing to note, slow job and population growth is still growth, and that's still a good sign for investors.